So Richard started working on microinsurance in January 2002 when he joined Opportunity International, a leading microfinance provider from Benfield Gregg, now Aon Benfield, a global reinsurance intermediary. At Benfield, he worked as a reinsurance broker responsible for the African account and worked in a team covering the Middle East and Southeast Asia. Richard pioneered the introduction of insurance products within the Opportunity Network, which led to the establishment of Microinsure in 2006. Welcome, Richard, and we are so honored and so happy and delighted to have you addressing IIA today.
Thanks for having me. It's been great to be here. Sorry I can't be there in person, but I'm delighted to be here remotely.
Fantastic. So let us begin by your iconic story of how you first took up microinsurance and then moved on to build Microinsure, and now how you've actually become a part of Lloyd's.
Microinsure can trace its roots back, as you said, to the beginning of 2002. I guess we were an Insurtech, although that was 3 years before Facebook was created. We all had grey screen phones. The smartphone wasn't even created yet. And dial-up broadband was still very much the way in which we accessed the internet. So, just to put it in some kind of, context, I guess Microinsure started because I looked at the world and thought, insurance companies have been around for many, many years in emerging markets, in Asia, in Africa, and yet 97% of the population still doesn't have insurance. So, if we look at the lives of the mass market, and by mass market, I'm not just talking about the low income, I'm talking about the middle income, I'm talking about even kind of employed people, white collar workers who perhaps are at the beginning of their careers. And what we see is that they do face enormous risk. They face enormous risk in every aspect of their life, and yet they're not buying insurance. And so I was convinced that it was because the insurance products were too complicated, and the process of signing up and using the insurance was just far too difficult. So we set out on a journey at Microinsure to try and demonstrate that if we partnered initially with microfinance banks, that's where we started, and we had very simple products and very digital, frictionless customer journeys. So we made it very simple to sign up, very simple to pay, and very simple to make a claim. Then we would overcome the apathy which most people feel towards insurance, and we would be able to sign up millions of people. So we started with the microfinance organizations. We then, in 2009, like you said, we were the first to move on to working with mobile phone companies, with the telcos. Our first product, as you say, was in India with Telenor. We signed up 20 million customers with Telenor in just the first 140 days. So this just shows you how kind of scalable those kinds of partnerships were. After the telcos, we moved on to the ride-hailing platforms and the food delivery and e-commerce kind of platforms. We were always very much a B2B company, right? So we were selling our insurance in partnership with these kind of B2B partners, banks, telcos, ride-hailing platforms. And we as Microinsure were kind of doing a lot of the work. We were designing the insurance. We were often designing the customer journey. We were often selling the insurance. We were using our technology to collect the premium, sometimes in very small daily amounts, a little bit like paying for ringtones, paying these tiny, 1 rupee a day type products. And we were educating the consumers, and then finally we were getting involved in helping the claims be paid quickly. And what we soon realized, and what I came to realize, was that as an Insurtech, as Microinsure, it was a big challenge for us for 2 reasons. One was to get the products which we wanted from insurance companies, because insurance companies are still incredibly conservative, closed-minded in many ways, and they won't give you the products that you want. But the second issue was that we just couldn't get paid properly for the work we were doing. So we decided that in order to overcome these 2 challenges, we needed to become the insurance company. We needed to move from being an Insurtech as a broker to being the full stack. The full stack means able to design, able to service, able to sell, and able to underwrite the product, do the whole thing end to end. still very much in a B2B model. And we did that, as you said in your introduction, in July 2020. We became the world's first full stack global microinsurance company. We can work anywhere in the world. And as part of that, we had a reinsurance company in Anguilla, which was fantastic. In the first year, we wrote $10 million of GWP, which was surprising considering that we didn't have a security rating. The big brokers couldn't work with us. So this was all just business that was coming directly to us. And we realized that actually we needed to become a kind of a fully part of the world's kind of economic system. And to do that, one of the best or the quickest ways to do that was to become part of Lloyd's, one of the world's oldest insurance markets. We would then get their security rating and all the credibility that came from being part of that. And we started that process about a year ago. And we have, in principle, approval to launch from the 1st of April.
Wow, that's like that's like everything that an insurer or a small microinsurance company can dream in any part of the world. It's like a grand journey that it's been for the last 20 years. But Richard, I'll ask you, very specifically about that one when you were, I remember that these are things that I've heard from your various interviews over the years, where you talked about how you felt when you got your first funding check and you were going from place to place trying to pitch to, private equity firms and companies to come and fund you. I hope that you remember that incident and you can share that with some of our members who themselves are startups today and might take some inspiration from how you felt that day and what you did to really convince people and eventually get that one big check that really made a difference to the way you actually came into the world.
I think. Are you referring to the time that we went after the Gates Foundation team?
Yes.
Right. So yeah, I mean, the early days, we were like most startups. You survive on whatever money you can find, hidden away in jam jars in the cupboard, or whatever you can do. You just survive, don't you? And we got to the point where I felt we had really cracked the MVP. We had a demonstrable kind of business model. We were starting to get traction, but we really needed money. And I thought to myself, well, who should I go and see? And it was at that point, Insurtech still wasn't a term, right? It still wasn't something that people referred to. So the idea of selling insurance to low-income people was not really an investable, idea, right? Investors weren't interested in that. And so I decided that we had to go to the Gates Foundation. And the reason that we went to the Gates Foundation was because they were an organization, or they are an organization, who invested in these kind of startup, ideas, things that were kind of really changing the way in which business was done. And we went to see the Gates Foundation, or I tried to get to see the Gates Foundation. And from living in England, where I live, it was very difficult, very challenging to really get any time with them. So I moved my family to the States for 2 years. Got a visa, went there, rented a house, set ourselves up. And then I started to try and find an opportunity to speak to the Gates Foundation. I used to find out where they were going in terms of events like conferences. And then I would go to the hotel and I would just sit and wait. And I knew who I was looking for from their LinkedIn, profile picture. And I would sit in the lobby and wait. And then when I saw them, I'd kind of run up to them and I would tell them what we were doing and what my idea was. And eventually, after about 3 or 4 months of doing this, and I got thrown out of a lot of hotels in the process, right? The security would throw me out. I got a phone call and they asked me to come and have a chat to them. And we talked them through what we were doing. And they were kind of interested. And a few days later, we got an email asking us to help them create an RFP so that they could pull together a kind of funding round. We wrote the RFP. When that was then launched, we applied for I applied for the RFP, and we asked them for $2.5 million, which I thought was just a huge amount of money. And at the time, they said, "Look, we are really interested in what you're doing, but we simply can't write a check for $2.5 million because we need to give away more money because we have a problem with giving away the money quick enough." And so I asked them in the meeting what they suggested, and they said, well, just ask for more. And so they pushed the application back to me, and I took out my Tipex, and I just moved the decimal place from making it 2.5 million to making it 25 million, and I handed it back to them, and they said, yeah, that looks great. And I walked out the meeting with a $25 million check, which was terrifying, actually, because I had no idea how to spend $25 million. It's actually harder than you imagine.
Absolutely, absolutely. But it's something. And this was, which year was this, Richard?
Oh, I think that must have been 2007, 2008,
Yeah,
because shortly after that we had the Lehman Brothers crash, and I think if I'd gone and seen them after the Lehman Brothers crash, it wouldn't have been such a big issue, because the value of their fund would have actually been decreasing, so they wouldn't have been trying to get rid of the money quickly.
So I guess timing makes a lot of difference. And when you're going and asking for the money. So I think, but it's a great
bit of luck, right? A bit of luck. A bit of luck. I had no idea that the Lehman Brothers crash was coming. So.
Yeah. So that's why I said, timing and a little bit of luck also is required. And I'm sure many of our founding teams here can relate to your story as well. But this is 2022, whereas you're talking about a time when startups were something that people do when they don't have a job, right? So that's how it used to be in those days. What do you think are the tech enablers that governments and regulators are using in Africa in terms of governance and control of these schemes? Can you just tell us maybe a few things that that impressed you and was different from other parts of the world, which is why it's working in Africa?
Yeah. So I think especially in Africa, the regulators have been very willing to work with pioneers like us to try and find solutions. So, for example, we had one instance where in the country in question, people were, had to put a wet signature, had to put an ink signature onto a kind of application form. And that's very, very difficult. That's kind of like almost introducing friction, because then someone has to actually come to the office and sign a piece of paper. And in the digital world, we're moving to a position where you can send an SMS, or you could use a USSD, or you could use an app, and that would be a lot more, convenient as a way of signaling that you were willing to buy, give your consent, right? Or you could say yes over a phone call. So I think we've worked with regulators in around some of those issues, or using airtime as a way of paying for insurance, right? So a lot of regulators say, well, use mobile money. Well, people have mobile money, but how many people have any value in their mobile wallet overnight? So most people, even today, still put money on the wallet, pay a bill or buy something, and then that's it. There's no money left. So actually, whilst a lot of people have mobile wallets, they're not a great way of trying to collect premiums, because there's no money on the wallet when you try and collect it. But taking, small amounts of what's called DCB, of daily carrier billing, taking money from people's airtime balances, is a very, very, useful way of actually collecting premiums. So working with regulators to be able to do that has been immensely useful. And what we've been doing is going to regulators, telling them the problem, telling them what our proposed solution is, and then having a kind of a partnership with the regulator, whereby we then go in regularly and tell them, how are things going? What are we learning? What are the successes? But also, really importantly, what are the failures? And then the regulator starts to trust you and realize that actually, you're working with them to try and increase access, because the regulator is there to protect the consumer, but they're also there to try and grow the market, right? And so, that's an important part of it. The final part is that in some countries, the regulators are starting to realize that after 20 years, or in some, 10, 20 years of trying to convince, insurance companies to go down market, that it isn't happening. And as a result, they need to allow a new license to emerge, which is the microinsurance licenses, whereby these Insurtechs can transition into being insurance companies, and that's starting to yield really significant results in terms of take-up of insurance.
Right, excellent. And that brings me to the final question. Yes, it's happening in India as well. I am expecting that, we are all expecting actually, that something around the microinsurance space is going to come up from the regulators. We also have a regulatory sandbox where, if it was present then, you could have actually tested your model and worked with the regulators later to talk about the successes and failures. So that's happening already, and that brings me to the final question, which is, hypothetically speaking, if you had to return to India in the current times, and assuming the policies and regulations were conducive, to your model, what are the ideas you would try with the improved advent of technology? What are the ideas, maybe one or two ideas that you would try in India? And I know it's a hypothetical question, but I think you're the right person to answer it.
And I don't want to, I think being part of Lloyd's does open up a huge new way of doing business for us. And I wouldn't be surprised if by the end of this year, I was sharing some quite interesting news with you about what we're doing in India. So I'm not going to talk about that because it's confidential. But if I, to answer your question, I think if I was entering the market, kind of, some of the ideas that I would love to try, one of the products we're doing, which is a little bit of a niche product, but we're doing it in a neighboring country, and I think it would work well in India, is that we're working with an app. It's an app-based business that helps people locate a parking space. Okay, so I know that this is probably niche in India because the majority, most people on this call or on this conference will be thinking, microinsurance, isn't that for poor people? Well, no, hear me out, right? Microinsurance is for short distance, short duration, and also for the mass market, right? So we're working with a parking app. The parking app exists to help people in busy city centers find a parking space, and then when they find a parking space, to pay for the parking space using the app. We've embedded our insurance so that when you download the app, you're asked a question, which is, would you like to have insurance embedded so that every time you park your car, you have a insurance that covers any small dents or any small scratches that might happen whilst you're parking your car. And we then have put our technology in the app. So you take a video of your car, and then if you want to make a claim, you take a picture of the scratch. We can compare the two images, and then we send you some money, which you can use to take your car and get the small scratch kind of repaired. I think that would be a really interesting product to try in India. Another product I would try and do would be, there's a huge proliferation of food delivery companies taking off in India. And they need something to differentiate themselves, both to the drivers, so the people that are actually delivering the food, but actually the users of the platform and the restaurants. And so I'd be coming up with products which rewarded drivers for being loyal to working mostly with this company. And I would also be coming up with products that differentiated the platform. So food is late, food is free, I think would be a great product, right? And being able to do that as an Insurtech, I think would be a really cool idea.
Yes, fantastic. I think it's been I know that this has been a very enlightening session, and I'm sure once we share it with our members too, they would have asked me that why didn't you ask Richard some more questions. So, but thank you so much for your time, giving us a large portion of your time today.
No problem. And if your members do have questions that arise from this, please do encourage them to reach out to me on LinkedIn. I'm very active on LinkedIn. If they want to connect with me, they'll find me there. I accept I think I accept just about every request. And if they want to then write me a question, I will answer it. I promise to answer it within a couple of days. And if I can't answer it, I promise I'll jump on a call with them and try and help them think through their ideas. I love engaging with people, so please do reach out and share your questions. Thank you.
Thank you, Richard. Thank you so much. We hope to see you in India very soon. Hopefully, if all is well.
Hopefully soon. I look forward to sharing with you some good news in the coming months.